Hello, everyone, and welcome to another ASUG Partner Webcast. My name is Maureen McInerney, Partner Marketing Specialist here at ASUG, and I'll be your moderator for this event. I'd like to thank everyone for taking the time to join us today for this presentation. Today's webcast is being recorded. The link to the recording and the accompanying slides will be posted to the ASUG website calendar of events, and all registrants will receive a follow-up email with the link to those materials once the webcast has concluded. I'd like to remind our audience members that you can submit your questions at any time by clicking the purple Q&A button at the bottom of your screen. Today's webcast is Ask a Fixer, transitioning from costing to account-based COPA, sponsored by ERPfixers. Our speaker today is Paul Ovigele from ERPfixers. And with that, I'll hand it over to Paul to get us started today.
Thanks, Maureen, for that introduction. Thank you, everyone, for joining this webcast, especially on a Friday afternoon. I'm hoping this will be a useful one. We actually had a part one of this webcast a couple of months ago. Margie Wright spoke about account and custom-based COPA, particularly in regards to S/4HANA. But based on the demand for this topic and the interest, we decided to split it into two. So Margie did the first part, and I'm doing the second part. And this is more on how do you get from A to B? How do you get from custom-based to account-based COPA? So just to start off with some introductions, ERPfixers is the company I work through, which is it's a platform of consultants that specialize in several SAP modules. We do several things. We started off just as an online platform, but we've extended into things like helping with optimizations of certain SAP modules, dealing in specific modules like material ledger, S/4HANA roadmaps, and certain customized reports. We started 3 years ago, and really, especially with the interest in S4, we are getting more involved with customers who are thinking about moving to S4 or those who are on S4 and just trying to figure out some of the new functionality. If you're interested in either visiting our platform or in the services we provide, you can go to the website, which is ERPfixers.com. If you're an ASUG member, you can access our website directly through the ASUG website. In fact, your ASUG username is automatically going to be your ERPfixers username. But if you just wanted to browse the website, we have a number of resources and blogs and things like that that we post every week on different topics. A short bio. I have worked as an ERP financials consultant for about 20 years in both North America and Europe. And I specialize predominantly in FI and CO modules and the integrated areas. I've written a few books on FI, financial accounting and SAP, reconciling COPA to the general ledger, and introducing material ledger in S/4HANA. In fact, just to touch on the second book, which is really just a small ebook that I wrote, this was before account-based COPA became part of S/4HANA, and I had a number of customers that had custom-based COPA and had challenges with the reconciliation. So just based on working with different customers and based on trial and error, I put together these steps of things that you needed to do in order to bridge the gap between COPA and FI. So I'm hoping this book with S/4HANA actually becomes redundant because the integration is directly through the Universal Journal. So I have three sections. The first one is, what is the difference between costing and account-based COPA? So first of all, just an overview of COPA. I'm assuming everyone on this webcast knows what COPA is, but just in case, it collects revenues and costs from various modules in order to analyze profitability. It inherits the characteristics that are associated with these revenues and costs. Characteristics of things like customer, product, region, salesperson, their field, basically, in a source master data object, which flow into COPA. The key figures could be value fields for costing-based or general ledger accounts or cost elements for account-based. So costing-based COPA, it groups costs into revenues and value fields. These value fields are mapped to several things: condition types, general ledger accounts, cost components, variance categories. Costing-based was the original model of COPA. In fact, when SAP came out with COPA, there was no intention to have account and costing-based. It was just meant to be COPA, right? It was only later on that they brought out account-based COPA, right? So, and most SAP customers that use COPA use costing-based, and most of the time when people say COPA, they're referring to costing-based. The advantages and disadvantages, the advantages is that it splits your cost of sales value into different cost components. It also splits your production variances into various categories. You get a better visibility of contribution margin into fixed and variable. To summarize the advantages of custom-based COPA, you get a more granular view of your general ledger accounting. Actually, I'll put this a different way. You get a better view of what's in your income statement than you can get in the general ledger. In the general ledger, your analysis of what goes in is limited to the accounts. But with custom-based COPA, you can break one account, whether that account is cost of sales or production variances, into other reporting dimensions. The disadvantage is that it doesn't show GL accounts and is not easily as reconcilable. And it's also more complicated to set up because you need to create key figures called value fields that didn't exist before you move to COPA. It just takes more time to set up and it takes more care to make sure they're mapped correctly. So what are the data flows into custom-based COPA? These data flows could be from a billing document, so the quantities that are billed, like net wage or sales quantity, the revenue, sales deduction, cost of sales, so basically sales conditions in a billing document flow into custom-based COPA. They are literally mapped to a value field. The cost estimate, when you bill a customer, if you use whether it's standard or moving average cost, that cost populates a value field, right? Now, the good thing, and this is what costing-based does, but account-based in ERP doesn't do, is that even if you have just one cost of sales GL account, there is a table where you can map the cost components of your standard costs. So whether it's material, labor, overhead, or fixed and variable overhead, you can map them to specific value fields and have your reporting in COPA that way. You can also post directly from a general ledger account. In that case, every general ledger account has to be mapped to, or groups of general ledger accounts have to be mapped to value fields so you can report on that basis. You can allocate from a cost center to COPA. You can also settle production orders, internal orders, process orders to COPA, either R&D and marketing costs or even variances. You can also settle WBS elements and network activities. And you can post directly to COPA, to costing-based COPA, with a manual transaction, which doesn't even hit FI. So the good thing about this, and this is really just a standard SAP view of what goes into COPA, is that when you start considering moving from costing to account-based, look at something like this diagram or a version of this to determine if you're actually going to capture in account-based all the things that costing-based have. Because the way I like to tell people is costing-based COPA was almost created with more of a comprehensive view than account-based. Costing-based was is looking at all the different modules that could possibly it could need to be reported on and have a certain way of mapping into COPA. While account-based in ERP was more set up just to say, hey, we got it by accounts. You've now got just COPA by account. So if you're transitioning, it's very important to look at what is going into costing-based COPA. How can we replicate that into account-based COPA? So this is just a continuation of the previous slide, and it's just showing from sales and distribution module, it goes from a billing document. From FI or MM, you can post a journal entry, or you can have a material movement go to COPA. From product costing or material ledger, you can set up your cost components and transfer those to COPA. If you have from cost object controlling, you can settle your production variances into COPA. And from project systems, you can run results analysis and settle your WBS elements to COPA. Now, so that was costing-based. Now, what is account-based COPA? It uses accounts as a basis for reporting. All P&L accounts need to be created as cost or revenue elements. Categories of these cost and revenue elements can be classified according to cost element groups. And account-based COPA was basically created really because accountants started to use costing-based COPA. It was, I think of it originally as SAP just trying to silence accountants who are saying things don't reconcile, right? So when you think of it, and this is not an official statement, but I think the power of COPA was put in costing-based. Account-based was a supplemental report just to give you that good feeling that you can see COPA by account. I say that also because some, especially in the ERP system, some SAP customers would wonder why account-based COPA doesn't give them everything they need. And the reason, because I think was really just a supplemental way of doing things. The original way that SAP planned for it. It wasn't meant to be like costing-based COPA, which is why now that account-based is required for HANA, people now have to go back to the drawing board and think, okay, now what do we need to do with this? So how do we need to map this correctly so that it gives us what we want? The advantages of account-based, well, big advantage is displayed according to the GL, and it's easier to reconcile. And I think even though this is just one advantage, it's a huge advantage, right? Because if SAP is meant to be the single source of truth, right? And by the way, single source of truth didn't just come up with S/4HANA, right? Single source of truth, when I started SAP in '97, that was what we were telling customers back then, was that this integrated system will give you a single source of truth. But if you have COPA saying one thing and the GL saying one thing, it causes confusion. You lose the reliability and confidence in these reports, and it's just not good generally. So reconciliation to the GL is huge. Okay, and then secondly, it's still, even though it's by account, it still does more than a typical P&L report, like your F.01 reports or a profit center report. Because a profit center report, you can analyze that profit center, controlling area, and maybe one or two other things. But in COPA, you can analyze by other characteristics as well. So it's more powerful than just a simple P&L or income statement report. The disadvantages of account-based are basically the advantages of costing-based. In the ECC system, I have to specify, because I'm going to go to HANA later. In ECC, you just can't go below, if you're particularly in a manufacturing or a product cost environment, you can't get better granularity of your data by just using accounts, right? Because when you post an SAP, it's not like you're posting to a cost component general ledger account. You're posting to like a cost of sales account, which is generic. You're not posting fixed versus variable. Sometimes you can analyze that based on what account it is, but sometimes you could have the same account that has some fixed and some variable. You can't get that with just using general ledger accounts. Also, some of the other things that make costing-based flexible You can't get that with account-based. I mean, things like posting, doing a manual posting. And I see this as good and bad. You know, it's bad that you can't do a manual posting in account-based COPA, but I also think it's good. You know, because if you do a manual posting, then there's a likelihood that your COP and general ledger are not not reconciled. So the manual posting part, I think it makes things flexible, but I think it also could be used incorrectly and could lead to more problems. So then statistical conditions is another thing. You know, again, you know, you could have sales orders that have conditions that you want to use for reporting, but you don't necessarily want them to go to the GL. They're not things that actually happen. They might be accrual. They could be like, what if? You know, what if we had this particular cost that's a percentage of sales, a percentage of something else, and we reported it, but we don't really want it to affect our financial statements. Can't really do that with account-based, and I'll throw in a qualification to that later on, but in ECC you can't do that, and that also could be seen as a weakness. So other features of account-based COPA, you can activate them both, costing and account-based. There's no disadvantage of activating both. In fact, the only disadvantage, if that matters to your business, is that there's now more data in the system, right? Because now if you post revenue, if you have cost and account-based activated, if you post a billing document, right, it's going to hit a revenue GL account. It's going to hit the account-based COPA tables, which I'll mention in a minute, and then also hit the custom-based COPA table. So if that, you know, database space is that something that you care about, then maybe that's a consideration. I think nowadays that's hardly becoming a factor with, even if you're not on HANA, I mean, database space is not, I don't hear a lot of talk about, you know, trying to minimize the amount of data. I mean, sometimes, but it's becoming less of a factor. Postings to account-based COPA get updated in tables with CO objects. What does that mean? CO objects are cost centers, internal orders, process orders, and all those objects that when you post to a cost element, they also need to be populated. Account-based COPA is just one of those. That's another important point with account-based COPA, even in S/4HANA, because when you hear the term account-based COPA, it sounds very all-encompassing. It means that, okay, anytime I post to an account, even if it's a cost element, anytime I post to it, we're going to get some account-based COPA. That's not the case. Account-based COPA is a cost object, just like a cost center, just like an internal order, and it competes for an account posting just like a cost center and cost and all the rest. So if you know about how you can post two cost objects to a single line between like a cost center and an order, it's the same thing with account-based COPA. If you have a cost center, you're not going to get an account-based COPA posting. All right, you'll have to do something else to transfer that there. All right, unless you want to get into the whole statistical versus real. But account-based COPA is only posted to when you do certain things to make sure that account is active and there's no other cost object that could take that posting. All right, so another table that's important for account-based is the CE4, and where XXX is your operating concern. That's an important table because that table applies to both accounting and costing-based COPA. A summary of differences, and I've already mentioned this is just a summary. The key figures in account-based are by GL account or cost elements. Custom-based, they are by value fields. Account-based is easily reconcilable. Custom-based is not as easy. Account-based can be viewed by three currencies: transaction, company code currency, and control and error currency. Costing is basically operating concern and company code. Account-based is more straightforward to set up. Custom-based could take a little more time. A change in configuration for the cost of sales accounts needs to be made for account-based. For costing-based, The cost of sales account is usually not a cost element and is configured slightly differently. With account-based, you cannot break out your cost of sales or production variances, while costing-based you can. And again, that point is for ECC. Account-based is fully integrated with S4. Costing-based is not fully integrated with S4 Universal Journal. So if anyone's spoken to someone from SAP, you'll hear several times that you can still use costing-based COPA. In fact, two things in the FICO world, particularly the CO world, that you will hear time and time again with S/4HANA is one is material ledger is required, but actual costing is not. And the second is that although account-based COPA is in the Universal Journal, you can still use costing-based COPA. Now, personally, I've told anyone who likes to hear that I hope costing-based COPA is totally phased out at some point. I don't see the point of hanging around S4. I hope this is just a period where people who still use it can get used to account-based and then finally have costing-based phased out. All right, so how do we set up account-based COPA? Because this webcast, the reason why we are having this webcast is really for people who either don't have COPA at all, right, or you have costing-based COPA and you know that account-based COPA is required for S4, and you want to know, okay, how do I get from where I am to account-based COPA? What is the pain or what is the ease of setting things up that I need to go through? So the first thing is to activate it. So for those who configure, that's pretty simple. Just check the box account-based. The second thing is to also activate it in the CO area. So I mentioned this before. Account-based COPA is a cost object, just like a cost center, just like an internal order. And so if you look at the, I don't really have the slide here, but you might have seen some SAP slides that show the operating concern and then, COPA and then value fields and profit centers. Think of account-based COPA sitting in the same spot as cost centers, internal orders, and all other cost objects with an offshoot to COPA characteristics. So look at account-based as a cost object where you can get COPA characteristics. While costing-based COPA, it might as well be its own different system. It's really like a mini BW in the ERP system. It has its own unique set of tables that don't touch anything else. Even when you set up costing-based COPA, most of the data structures, you can't even transport them the way you transport everything else in the ERP system. It almost seems to sit in its own different universe, while account-based COPA is more integrated with the controlling area and cost objects. So one of the key things is to make sure when you activate account-based COPA, you do it in the CO area, and you make sure the activation status shows either account-based COPA only or both account and cost-based COPA. Profitability segment characteristics. These are a profitability segment, for those who don't know, is just a combination of characteristics, right? A profitability segment could be a customer, or it could be a customer in a specific region, or it could be a customer in a specific region who you sold a specific product to. It's just a combination of characteristics. So this screen is just saying, what characteristics do you want to show up in account-based COPA? The reason to have this selected is because the default in this screen, transaction KQ3, is either don't show the characteristic, and the reason not to show it is that the more characteristics you show, that's in the profitability segment, the more you show, the slower it could take to extract a report, right? You're making the system do more, right? Think of it as if you don't have it displayed, it's pretty similar to having these summarization levels. It's kind of similar to that. You're saying, I don't care about seeing a sales order on every single line of a COPA document. So here you decide if you don't want to see it, if you want to see it for just cost and base or if you want to see it for both. Creating cost element groups. Now, I had mentioned that cost and base COPA is based on value fields, and those value fields are groups of general ledger accounts. Account-based COPA, think of a cost element group as almost the equivalent of a value field, because if you have like 6, 7 revenue accounts in your reporting, you may not want to see 6, 7 lines. You may only want to see one line that says revenue, right? In cost and base, it's most likely you map all those accounts to one value field called revenue. In account-based, since it shows by account, you're going to see all 6, 7 accounts unless you map it to not map, but you create a cost element group to roll them up. I mentioned configuring cost of sales as a cost element. So the reason, now, and I don't know the technical reason why a cost of sales, actually, I don't know the technical reason, but I know why they do it that way. In cost and base COPA, particularly if you're on a make-to-stock model of SAP, your cost of sales account is not a cost element, right? Now, why isn't it a cost element? Because when you do a goods issue, the general ledger account is posted to, COPA is not. When you bill, revenue and cost of sales are posted in COPA, but the general ledger only gets revenue posted. So if a cost of sales account is set up as a cost element, then when you do a post-goods issue, it would also post to the CO module, right? But really in COPA, it's only when you bill that it should go to the CO module. So I guess as a way of not double counting, the cost of sales account is not a cost element in costing-based COPA. However, in account-based COPA, when you do a goods issue, it does go to COPA. When you bill, it doesn't. Only the revenue goes to COPA. So with account-based COPA, you have to do 2 things. 1, create your cost of sales account as a cost element, and 2, you need to map it to the correct transaction key or general modification key, VAY. VAY is basically where you map a cost of sales account when CO will be posted with a goods issue, right? Because right now, when you do a goods issue, if you're make to stock, you only post to the general ledger and FI. CO is not updated with that. So that's just another thing. And again, if you don't configure these settings yourself, it doesn't matter. But if you do, it does matter. The other thing I have, just as a side note, is that this same logic applies to production variance accounts. Right now, a production variance account is not a cost element. Same kind of reason. That's because in COPA, when you settle a production order or a process order, it's the variance categories that are mapped to COPA, not the general ledger account for production variance. If the general ledger account for production variance was also a cost element, then you would need to, it's going to double count, right? You're going to have the variance categories posting and the general ledger account posting. So again, this not making the cost element is a way of keeping the posting only in the GL because it goes to COPA in a different way. All right. Now, if you have both accounts and cost and base COPA, then you would need to have, you're basically trying to get the best of both worlds. So you will have your production variance account as a cost element, even though your variance categories are going to COPA a different way. But then you'll just have to map your variance account to a value field that you're not going to be reporting on. And that is actually one of the things you need to do if you're transitioning from costing-based to account-based. All right, so let's just briefly talk in this third section about COPA in S/4HANA, right? Because a key reason why there's more interest in account-based COPA is because of S4HANA. If not for S4HANA, I don't know anybody anyone on custom-based will be talking about account-based if they already have used custom-based for a while. Even those who, I've had this before. I've had SAP customers who have custom-based where custom-based does not reconcile to the general ledger. And I have suggested that there is another type of COPA called account-based. But when I tell them that, oh, but by the way, you don't get your cost component split, you don't get your various category split, they say, oh, no, we don't want it. We want to reconcile it a different way. So I think because of S4 and because of what they've done with account-based, I think now there's more interest and there's more comfort with knowing that account-based is actually going to make up for all the deficiencies we had in ECC is made up for in S4HANA. So some things to know. Both forms of COPA are possible, okay? Right, so that's a huge message that SAP tries to get out there, that we're not saying that account-based COPA is phased out. We're not saying costing is phased out. We're just saying it's not part of a universal journal. Just as in your ECC system, the characteristics that you set up are applicable for both costing and account-based. Account-based COPA is structured by accounts and only includes the entries that hit an account. Costing-based COPA is structured by value fields and could include entries that are posted to accounts or statistical entries and quantities. It's a universal journal. I'm sure everyone's seen this in some form, but it's just showing how the universal journal, I mean, S4HANA and universal journal are two different things. They're mentioned, especially in FICO, as one and the same, but it's not because of S4HANA itself that you need to go to account-based. It's because of the benefits of the universal journal. A huge journal, which seems to be growing actually. Every time I hear something new from SAP, they've done something new to the universal journal. So everything seems to be, it's almost like all eggs in one basket. Everything seems to be coming in here. General ledger, COPA, cost object, asset account, and material ledger. Everything is in the universal journal. And so this big table, AC.A, has all the different dimensions, including COPA characteristics. So COPA characteristics are actually fields in the universal journal that you can report on in addition to all the other fields that are in the universal journal. So as I mentioned before, all the characteristics in account and costing-based COPA are added to this universal journal, ACT.A. And if you want to add your own fields to the universal journal, which you can do with a coding block, you can add those fields to account-based COPA by running this program. So that was just a short taste of what is in S4, the universal journal, and the account and custom-based COPA implications. Now, the last section of the webcast is really I would say the core of this webcast, which is, okay, how do I get from A to B? Okay, I've heard about what account-based is and custom-based. I know what the differences are. I know how to set it up to some extent. I know what the S4HANA, how it fits into S4HANA. Okay, how do I get from where I am to, which is custom-based to account-based? So how do I get from no COPA to account-based COPA? So what I have in the next about 6 slides, first thing to say, there is no automatic one button push that can get you from one to the other. Not yet. But it's one of those things that down the line, maybe that's the way SAP will do it. There isn't an easy way. Maybe some companies have some consulting companies have custom programs or things that you run, but more importantly than the technical part of it, it's really from the functional part. What do you need to consider if you're going to move from one to the other? Because it doesn't make sense to be in S/4HANA and use costing-based as your main COPA. To me, that's my opinion. It doesn't make sense. You're actually just it defeats the whole purpose of what the Universal Journal is about. So eventually, everyone's going to go to account-based, right? So the next 6 slides are, what do you need to consider? One is condition types. One of the main things being mapped to COPA are condition types. In fact, I can say that in every COPA implementation I've been part of, there's never been an implementation that doesn't involve mapping a condition type to a value, to a costing-based COPA value field, right? It's one of the core things of costing-based COPA. So now if you're going to go to account-based, the question is, are you sure that every condition type that you map to a costing-based COPA value field is being replaced by an account? And this might sound simple. You might say, well, you know, if it's not, if I don't have the right account assigned to the sales condition, the billing document wouldn't even post, and that's true. If you break the link between a condition type and a value field or the GL account, you get an error when you bill. But however, what this is really saying is that if you have, for example, I mean, a typical one that I see is discounts. In companies, in a lot of companies, they have several discount condition types in SD. They've mapped those discount condition types to different value fields in COPA. However, the account key that's mapped to those condition types is just one, called like discount, right? But so if you just leave things as they are and move over to account-based, either in ECC or HANA, then where you could report on 4 different buckets, you only have one now, right? So that's one thing to know. The other thing I mentioned before was if you use statistical condition types, statistical or condition types don't even go to the GL at all. I mean, a very typical one is condition VPRS. If anyone knows VPRS, that's the cost condition on a sales order. That doesn't go to the GL. Why? Because the GL doesn't, the GL posting is on the cost of sales account, which is configured somewhere else. It's not based on a condition. So with those kind of condition types, whether it's VPRS, in fact, VPRS you don't really need with account-based, but other statistical condition types, how do you get them to account-based? So I think up till 1709 S/4HANA, there was, you know, it was just basically just wait, you know, there was nothing that could be done. Now with 1809, what we're hearing is that there's been some accommodation for this. I think it's using a different ledger or something like that. I don't know. I haven't yet test driven an 1809 client. Hopefully, I'll do so in the next month. But that's resolved in 1809 apparently. The other thing is user exits. Now, obviously, if you're moving to S4, I would recommend that you look at user exits anyway. But if you're an ECC and just moving from costing to account-based COPA, just bear in mind that certain user exits are more costing-based. So I would take a look at user exit. If you have user exit COPA 0002 or 0005, take a look at those because those touch either value fields alone or characteristics and value fields and nothing to do with cost element accounts. So take a look at those and try to replicate that logic somehow and make sure it you know, in account-based that gets updated too. If you use assessment cycles in costing-based, so when you do an assessment cycle, this is transaction KEU1. If you do one of those, it does update. If you have both costing and account-based COPA activated, you can have the same cycle for both. However, you need to, if you're moving to account-based, look out for your tracing factors, because in an assessment, you can only choose one. It says, do you want your tracing factor to be account-based or costing-based? And so take a look at that, and also make sure that your assessment cost elements, that's your secondary cost elements, and HANA, they're part of the GL now, just make sure that they are they're set up in a detailed enough way for you to report. Because remember, you're now moving from value fields to secondary cost elements or GL accounts. Also with top-down distribution. In fact, some time ago, people didn't know that top-down distribution was available for account-based. Well, and that's probably because they didn't even know account-based existed. But top-down distribution is available for account-based, has a few nuances that are different from cost-based. But if you use top-down, make sure you have it set up for account-based. And the last time I mentioned this, someone asked me, what is top-down distribution? So if you don't know, it's just a good tool to use if you want to distribute, if you don't have characteristics available at the time a posting was made, but you want to do something like an allocation from, let's say, a characteristic like plant, and you want to take that posting down to a lower level like material, right? Maybe at the time of posting, for some reason, you didn't know what the product was, so you just posted to plant. And now you want to say, I want to spread this posting to all the materials in this plant based on some allocation factor. So that's what top-down distribution is. So it's available for both cost-based and account-based, but you need to change, or you need to set up the transaction if you want to use it for account-based. Allocation structures. These are more important for account-based because allocation structures are basically the mappings of a cost element on an originating object to the cost element on a receiving object. Allocation structures are used for things like settlement. So if you're settling an internal order, or if you're settling a WBS element, or assessment. If you want to map primary to secondary cost element, use allocation structures. So again, the same logic is that your allocation structure needs to be set up so that your receiving cost element is detailed enough for you to report in account-based COPA. Manual COPA postings. Several years ago, I used to, when I used to talk at these conferences, I would talk about all these manual COPA postings that nobody really knew about, like KE4S, FI, KE4S, MM. There's lots of cool things that you could do in custom-based COPA, either after the fact or by deleting the document in custom-based COPA only and reposting it, or posting the document like KE21N directly to custom-based. It was so flexible. But like I said earlier, there's a danger with these transactions that if you use them, you could end up deviating your balances in COPA even further from the general ledger. So these manual postings, if you have account-based COPA, unfortunately, you can't do that anymore. But then it's pretty similar to a lot of companies I used to work with, particularly in the first 10 years of my career, that used to use Excel for everything. And then I had to break it to them that, you can't just simply, cut and paste like you did in an Excel spreadsheet when you're in SAP. And it's kind of similar, you get the flexibility with some of these things, like in custom-based COPA and manual postings or in Excel. You lose that flexibility if you move to these more tightly integrated functionality. So you lose the flexibility, but you gain the integration, you gain the, tight reconciliation and all that. So I guess it's a trade-off, hopefully a good one, but definitely something to watch out for. Okay, so that is actually the last slide. And I think Maureen had mentioned at the beginning that you can submit your questions at any time. So I'm going to hand back to Maureen, and she'll read out any questions we have, and I'll try to answer them as much as I can in the next 10, 15 minutes. If I don't get to answer them, what we normally do is just collate all the questions, including the ones that have been answered, and we send them to everyone who attended the webcast with the answers. So I'm going to hand over to Maureen. Thank you.
Thanks, Paul. As you mentioned, we're moving on to the question and answer portion. Please use that purple Q&A button at the bottom of your screen if you have any questions. We do have some in there, so I'll get right to it. The first question, why activation of actual costing is optional in S/4HANA, and can you provide a specific example?
That's a great question. I have to say that it has nothing to do with this webcast, but I'm going to answer it anyway, because actual costing has to do with material ledger, not with COPA. So I'm hoping that the person who asked the question knows that, because if you think it is to do with COPA, actual costing is a totally different thing. But I'll answer the question anyway. So actual costing, so with S/4HANA, material ledger is required. Material ledger in S/4HANA is required just because it's a way, it's kind of a universal journal for inventory, right? So all your inventory postings, as well as any attributes or dimensions that come with it, are in a big table, actually several tables, but a few big ones, MAT doc, ML docs. So material ledger is only required so that you can have better granularity of inventory postings. Actual costing is a specific functionality for companies who need it. For companies that don't want to be on standard costs to value their inventory, they want to revalue the inventory to actual. That's what actual costing is for. And that's the actual costing I was talking about. So I'm hoping that the person who asked the question knows that this is not really a COPA question. I actually only mentioned actual costing as an example of things that have changed in S/4HANA. Okay. If you have any other questions on that, I would suggest I actually had a webcast last month, or maybe actually a few weeks ago, on material ledger actual costing and the conversion, and we have it on the ERPfixers website. So you can take a look at that, or you can send an email. We'll give the email, just before we end this webcast, and I can answer any further questions.
Thank you. The next question, can you comment on the 1809 release and the sort of merge of account-based and cost-based COPA?
Yes and no, or more accurately, no and yes. So I can't really comment to the 1809 yet, because I don't have I will start using the 1809 system in a few weeks. Right now, I'm still on 1709, because obviously 1809 came out in September. It's still relatively new. So from what I hear, certain things haven't changed. With material ledger, certain things haven't changed. Account-based and costing-based, a few key things have changed. Margie did the part one of this webcast. I think she had some of the, on one of the slides, she had a few bullet points of things that have changed. And I will mention some of these. So the question that was asked is, can you talk about the integration of the relationship? Now, there's not really a relationship of account and costing based in 1809. If anything, I think the new functionality in S1809 actually divides costing and account based even more. Because if you think about it, before S4HANA, it made more sense to use account and costing based together, because you could say, well, costing based gives me more granularity, account based is reconciled to the GL. But now, what SAP has done with 1809 specifically is they've added even more functionality to account-based that was previously only in costing-based. So in 1809 and beyond, there will be less and less need to use costing-based. Now, maybe I'm just preaching that, because I want costing-based done. I think it's confusing, and I think if all the functionality that I talked about earlier in this webcast, like granularity of cost of sales or production variance categories or statistical conditions, If all those things can be in account-based, then really, we don't need costing-based. You know, you don't go to management, you don't send a report to whoever, or you don't analyze a report with account-based COPA in your head or costing-based. You're just looking at a report. So I think it's time to streamline those functionalities, so it simplifies things, and you don't have so many different tools that are doing the same thing. So, so just to summarize on that, in 1809, what SAP has done is added more functionality to account-based COPA that was previously only in costing-based COPA, so that when you're on S/4HANA, you can use account-based COPA and not think, oh, but I could do this in costing-based and I can't do it right now. I think the idea is account-based COPA will be the single source of COPA reporting going forward.
Thank you. The next question, is there an advantage of going to account-based COPA before S4?
Going to account-based COPA, I mean, first of all, it depends on the company and your business requirements. So if you, actually, if you were going to go to S4 in a couple of years, I would recommend you turn on account-based COPA now. That's my opinion, and I'll tell you why. Because if you just say, I'm going to wait until I get to S4, at the moment, there's no migration of history into account-based COPA in S4. There's no migration of costing-based COPA. It'll be nice if you could just flip a switch and everything in your value field is populating account-based COPA. But the truth is, there's nothing right now. So if you could activate account-based COPA beforehand, your data is building up. It's hitting those tables that will be migrated to the universal journal. Like if you were going to costing-based COPA in 2 years and you activated account-based COPA, if you were going to S4 in 2 years and you activated account-based COPA now, that's 2 years of history you have in these account-based COPA tables, COEP, COBK, that will, when you're in S4, you now have the migration of history as well as your current data. Another thing to think about is S/4HANA, as I like to tell people, is not, there's so many things happening. You got material ledgers turned on. You got new GL is turned on. You have a change of how the vendor and customer master are presented as business partners in S4. You got new fixed assets accounting. And you got so many things going on that I would recommend you don't just wait until, a lot of people are saying, hey, we'll worry about that in 2025. It's not like you're going to wait till 2025 and all of a sudden the world is going to change. You know, you have to start planning it and you have to start getting used to some of this functionality, or in 2025, you're going to end up the way, well, in my career, in 1999, when a lot of companies were moving to SAP because somebody, I don't know who it is, told them that SAP will resolve their Y2K problems. So they all went in and implemented SAP. Y2K came, nothing happened, although some people would say, oh, it's because you implemented SAP, nothing happened, that there was no disaster, but nothing happened, and they had this system they had no clue how to use, right? They didn't prepare, they didn't map their business process accordingly, and some of these companies are still going through some of these pains because they didn't do it right. So, 2025 is not that far away if you wanted to get used to all this stuff. And that's just all the stuff that's happened right now. I'm not talking about the stuff SAP is going to keep coming out with in their future releases of S4. So it's definitely something to think about, at least if it's worthwhile activating right now, get used to the functionality, build up historical data so that you can get used to all the other functionality and just kind of be further ahead of the learning curve when you move to S4.
Thank you. Next question, if we currently have costing-based COPA and if we will shift to dual costing account-based, how will that historical data be migrated?
Right, so that's basically what I was saying earlier, which is right now there's no easy way to do that migration. There's no switch, there's no migration tool right now. I know a couple of companies talking about creating migration tools, and maybe that's a business opportunity for anyone who wants to get into that. But right now, it's really just a proper planning, doing some of the things I said in this webcast. Some of these considerations, and doing manual postings, or you utilizing the migration tool in S4 that brings data into S4, that posts historical journals, but kind of using that to post custom-based COPA data into the universal journal. So it's almost like a workaround to there not being a migration tool. So I would say watch this space, because the more companies that move to S4HANA, the more pressure there will be probably on SAP to come up with a migration tool.
Thank you. It looks like we have time for about one more question. This question says, did I hear you say there is no quantity from SD billing in Universal Journal in account-based PA?
No quantity. No, first of all, I didn't say that, but I think I know what this person is saying. In the Universal Journal, so first of all, account-based COPA is not as flexible when it comes to quantity as costing-based COPA. In costing-based COPA, you can have as many quantities as there are quantity fields. All you need to do is create a value field and map the quantity field to that value field, and you're good. And that's it. So if you have in your billing document, if you have 20 different types of quantity fields, I don't know if there are that many, but if you had many, you can map them all. In account-based COPA, in ECC, you only have one quantity field, and that one quantity field is called total quantity. That's it. Now, even though you have this one quantity field, if you combine that quantity field with a GL account, you could have a quantity field for revenue, you could have a quantity field for cost of sales, a quantity field for variance. So you do have different quantity. You have the same quantity field, but it's reported according to the account it's posted with, right? Now, in S4HANA, they've added at least 3 extra quantity fields. It's quantity field, I think they're literally called Quant 1, Quant 2, and Quant 3. So in S4HANA, you have a little more than you had in ECC. So just to reiterate, I didn't say you can't get quantity in S4 account-based. What I said is there is one quantity field, but when combined with an account, it makes the quantity for that account posting. In S4HANA, you have now 3 more quantity fields that are added to that one.
Thanks, Paul. That looks like all the time we have for the Q&A, so I'll hand it back to you for any final remarks before we close out the webcast today.
Well, I just want to say thank you for attending the webcast. Hope this was useful. I think if you can, even if you didn't attend our first webcast that Marjorie Wright did, if you could go to our website, that webcast, we have the webcast recording there. That, in conjunction with this webcast, I think will give you some good, if both put together, will give you a good understanding of what the functionality of account-based is and how to convert from either costing to account-based or from no COPA to account-based. If you want any other information that you have, I know there was one question at least that may need some further expansion, if you can email us at info@ERPfixers.com, or you can check out our website, www.ERPfixers.com. And then this is the last, I believe it's the last webcast we're doing this year, but just look out for further webcasts that we have next year on different topics. Thank you very much.
Thank you again, Paul, for a great webcast. On behalf of ASUG, I'd like to thank ERPfixers as well as everyone who took the time today to attend this webcast. As mentioned before, if we didn't get a chance to answer your question, Paul will follow up with you after the webcast. But before we go, I'd like to leave you with some quick information on ASUG with anyone unfamiliar with our user group. ASUG helps connect SAP customers to the people and information that they need to maximize their investment in SAP. If you'd like to speak to someone about becoming a member of ASUG, please message info@asug.com. As mentioned before, the recording and slides from today's program will be posted to the ASUG website, and all registrants will receive a follow-up email. Please take a moment to complete the survey by clicking on the green button at the bottom of your screen. With that, I'd like to close today's webcast. Have a great day, everyone.